Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update and video for Wednesday, December the 12th. And as always, we'll start with the S&P 500 because that's what's most important when we're talking about the overall market. And it has been, I was not here, I didn't do a video last Wednesday because of Bush's funeral. And so it's been 2 weeks since I've been here, and we've had quite a big move since then. In fact, let me zoom in here, and the last time I did a video was on the 27th, right here. And I can't remember exactly what I said, but I think the gist was that if this low held, that we bounce, come back and retest this high, and that's what happened. No crystal ball or anything there. I mean, it was pretty obvious that we're in this double bottom phase and coming back up to test this, but we actually didn't even really we got close, but not near close enough actually, and then immediately rolled back over. So I was not expecting this. I really thought that we would come up here, test this high, break through it, Santa rally, much higher, come back up here, possibly into the end of the year with some much higher numbers, but that's not what happened. So let's back out here real quick and look and see where we are. This is a 1-year chart, and if you notice, we came, you see that 2600 big line in the sand right there? We've touched it a couple of times here, come through it a couple of times, but here, and we did on the candle wick down. We actually came down on this last one to 2583, which is there. So at this point, it's anybody's guess as far as which way we go, but we know from history on the technical side that these are some important levels. If we were to roll back down this way, this 2550 and then the 2534 or 32, excuse me, that's the low if we were to come back down here. Now I have I'm thinking that and maybe I'm actually pretty light on my position, so I'm trying to have a neutral attitude on the market, but my thinking is that we come back up here again and try another run at it up here. Now what's been going on lately is, of course, we've got so much political news going on. Today we had Theresa May, the vote of no confidence, and she actually won the vote, and so she gets to keep her job, I guess. But we've had Trump, we've had Cohen, we've had China, we've had the arrest of the CFO of the Huawei, or however you say that company, and then China arresting the Canadian citizen, all that kind of stuff. Interest rates, Fed, so forth. So that has been causing major indigestion for the market. So if we look back here, this is what's crazy. Let's go, now we'll do a 10-day chart. So for those not keeping score, 10 days, we went 2800 up here all the way down to 2583 and kind of started making our way back. We did fail that's a 200-day moving average right there. We failed and into the close today, and yeah, but that doesn't necessarily bother me that much. I'm still leaning a lot more optimistically toward the bullish side, and the reason, now I don't know what's going to happen tomorrow, but the reason I'm leaning bullish, a little more bullish, is that we have Fed meeting next week. So we all know Powell is dovish and are going to probably be dovish. The expectation of rate hike has dropped from 90 8% to 70 down to 50. I don't even know where it stands now because I quit looking, but much lower, and the market should like that, and we should, that should give us another leg higher. Should I don't know what the Fed's going to say, but they said last week, or said when Powell kind of came around and with his dovish tone that that's a pretty good indication of what they're going to be conveying at the Fed meeting next week on Wednesday. So again, between now and then, we could go up or down any day. The closest thing that we have to watch for if we do come back is this 2583 area right here, if we indeed do come back down. Now, the one thing to watch out for tomorrow, I'm doing this video on Wednesday. Tomorrow is, quote unquote, the pit bull low, which is a phenomenon that's been going on for a long time. The market usually sells off on the Friday before next week's or the Thursday before this next expiration, the monthly expiration. Lately, it's been happening on the pit bull lows. Actually, been happening on a Friday, but Thursday, Friday. So we could actually go back down or retest, or not retest. I hope. But we could have a soft or down day tomorrow, and maybe even Friday. Maybe we come back down to that lower level. I don't know, but that would actually set us up for a run higher, most likely into a Fed meeting next week, and then I think we go higher from there, and that could actually turn into a Santa rally if the news is good from China and everybody is happy with that, and things remain relatively calm. Again, that could set us up for another run up here. Now this is all firing on all cylinders. Everything's working great. China's happy. Everything with Trump and tweets are happy, and all of the other thing, Italy, all the other issues, remain relatively calm. We could get that. So a lot is going to happen in the next couple of weeks. Then that sets us up for going into the end of January. We've got earnings and new earnings season, all that kind of stuff, and that could set us up nicely ahead of that. But all that being said, I would love to give you guys some trades or some ideas or things like that, but I don't have any. I'm very, very, very light, and I would recommend also, be very selective on your, on your stock picks, and keep a lot more cash than normal here, just in case we do come back, and as we go higher, I'm going to be hedging a little bit more this time. So very, very, very tough spot in the market. There's just too many variables up in the air right now, and we are in news driven frenzy market. So again, just see what happens tomorrow, Friday, and then keep your eyes on next week for the Fed meeting on Wednesday. That might be a turning point, and that's what I got for you right now. So I hope this helps, and I'll see you at the next update. Thanks a lot, guys. I appreciate it.